Hi, Grace here with the Grace Frank Group. I'm here with Eddie. Um, and we're here with Dan LaVan today. And Dan is an amazing investor. I was driving home a couple weeks ago and we started to have this amazing discussion around multifamily right now. And the big thing about multifamily is this is a unique time in real estate. And Dan is a financial guru, in my opinion.
That's very nice of you.
Well, you really are. You have so many interesting things. So we got in this discussion about inverse yield curve. And I'm like, oh my God, like Dan, this is such smart information. So I thought it would be great to have Dan today talking about this. So what is it, Dan?
The inverted yield curve is really where short-term rates are higher than long-term rates.
Mm-hmm.
And typically, and you'd think if I'm going to invest in something that's long-term, that I should get a better return because I've got more risk and time,
Right,
right? But
right.
in the last number of years, 5, 7 years,
Uh-huh.
we've had an inverted yield curve where the short-term rates have been larger and higher than the long-term rates.
Okay.
And that's the inverted yield curve. That's not a
Okay.
normal curve.
Right.
And so what we've seen in essence,
Mm-hmm.
life has not been normal since COVID.
Right.
And so, to spur the economy, that's what the Fed has done is
Okay.
raised short-term rates.
Okay.
So Dan, how would that impact investing in multifamily?
Well, multifamily, generally speaking, or any of these, right? It encourages a little bit longer in an inverted yield curve. It encourages a longer bet than a shorter bet. It's better than a 2 or 3 year period. It's better to go for 5 or 7, 10 years type of thing. And so interest rates, if you look at say a Fannie Mae or Freddie Mac, the agency loans, uh, people were financing these at typically 10 and 12 years in the past. Right now, because there's a correction going on in this inverted yield curve, really 5 years makes more sense on a project. But there's obviously timing makes risk. And so in 5 years, if you refinance a project now, if you're going to decide to keep it longer than 5 years, you've got some interest rate risk in that process.
Okay, so Dan, for anyone that's looking to sell their multifamily property right now, what would be the advantages of doing that?
Well, Eddie, there's obviously we talked about property taxes and interest
Mm-hmm.
rate being the biggest expense.
Mm-hmm.
The other interesting thing is the politics and the political pressure of that's going to occur with President-elect Trump. And we're not exactly sure because he hasn't made any comments about that. But there's been a lot of push to have deficit reduction and some of these other policies in the Senate and the House, and that will tighten the money supply.
Mm.
And that will make buyers, make them more difficult to get loans.
Okay.
And so if you're a seller, until those bills are passed, money still is pretty loose
Mm-hmm.
and available.
Mm-hmm.
And we just don't know what the policies will be once those things are established.
Okay.
But money won't be as loose and free for buyers. So if you're a seller, timing is part of it.
Mm-hmm.
The first 2 years, President Trump will probably elected President Trump will be very active, but you get to that lame duck period in the last 2 years, and you get less done. And he also has both the House and the Senate working for him in the first 2 years, and it's very common for him to lose one of the two houses in 2 years from now.
Mm-hmm.
So if you're selling and you plan to sell, this is a great time before money tightens up and before we have an unintended consequence of higher rate or tighter money policy.
Okay. So how long do you think it'll take for that to all play out?
I don't watch a lot of news
Yeah.
because it's so depressing, but I did watch some last night, and both the Senate and the House they're already working on either a bill or two bills to address some of this, the Deficit Reduction Act and some of the other things, and it's going to happen pretty quickly, but the impact of it probably won't happen until summer or fall. You won't see a lot of that changing. Now, obviously, interest rates are anticipating actions, but what the policies are at the bank and such, it takes time to roll that out. So it's always, sooner is better than later on something like this.
Okay. And then what do you think is going to happen with interest rates this year?
If I had a crystal ball, I think everybody would say that, right?
Mm-hmm.
I don't think they're going to move dramatically. I think the the inverted yield curve is going to correct.
Mhm.
So long-term rates will become higher than short-term
Mhm.
rates. But inflation is real, and so you just can't ignore that, and so that will push that has upward pressure on the interest rates. So it could be that all rates are a little bit higher by the end of the year.
Okay. Okay. So basically, if someone's looking to sell, now would be the time versus if they waited a year from now, there could be less buyers in the buyer pool and interest rates can also be higher
Yes, yes,
and less money available.
and clearly that'll probably be the case in 2 years.
Okay.
So
Okay. So if
so
you're looking
just
to sell,
if you're looking to
go ahead and
sell,
sell.
get it listed
Yeah.
quick, and people will buy. But it also there's President-elect Trump is a very business friendly, so he may have something up his sleeve too that
Mhm.
we're not aware of yet,
Mhm.
because he's done that already.
Mhm.
So, how would investors use this dynamic this year for investment strategies?
Yeah, there's no panacea, and there's no
Right, right,
simple answer to that
right.
equation. I think probably if you're an investor,
Mhm,
the very first thing I would ask, or I'd want to see a rent roll and a T12. T12 is the last 12
mhm,
months, or maybe a T3, which is the last 3 months
right.
of income, to see what that net income is at the
Mhm,
bottom line.
mhm,
And then compare that is what am I going to pay compared to that?
mhm.
And then that's a cap rate.
Right.
And so is that cap rate above or below what I expect the interest rate to be at?
Mhm. Right,
And generally, if you're an investor, there has to be a really grand story if you're going to buy something in negative leverage.
right.
And
Yeah.
negative leverage basically means you're going to do something significantly different to that property than what
Mhm,
the present owner is
mhm.
doing, which
Right.
also probably means you have to get bank debt, not agency debt, which is
Mhm,
more expensive as well,
mhm.
because you're going to do something more risky,
Right,
significantly different.
right.
From a seller perspective, it is in their best interest to watch because raise rents to where you can raise them
Right.
and manage expenses
Mhm,
real well.
mhm.
Prepare your asset for sale,
Right.
right? Because they're going to look at your market rate is
Mhm,
directly tied to how you perform in the income statement.
mhm.
And we're talking very specifically about income producing assets,
Right,
not just multifamily, all
right.
income producing. A development is a totally different
Mhm.
scenario, but that's for income producing assets. That's for the
So
seller.
really the most important thing is that your cap rate really needs to be above the interest rate.
It always does. Yeah.
If it's not, then there has to be some crazy reposition or appreciation potential because
Yes.
it just won't make sense. So that's one thing I always try to tell multifamily owners is like, okay, let's look at your rent roll. Let's decide what you need to transition right now. I mean, I had a client recently that had a lot of short-term rental units, and it was great during COVID,
Hmm.
but it started to slip the last 18
Yes.
months. So we were like, look, you need to like shift that to midterm or long-term um, furnished to get a higher, lease payment versus keep having it pull back, which is going to, you know, concern is your price that you're going to get is going to go down.
Right. Yeah. And I think if you look at the Airbnb short term rental
Hmm.
type of or even marinas,
Hmm.
right? Their high point was during COVID,
Yeah.
right? Because people
Oh, yeah.
were coming
Crazy.
out of markets that were locked down to
Hmm.
markets that were a little bit more free, and they could,
Right.
if I'm going to be gone, I might as well enjoy it a little
Hmm.
bit.
Yeah.
And so all of them have seen their values slip,
Hmm.
and obviously the boaters, that's another very similar to
Right.
multifamily. They've um, it was high in 2020.
Yeah.
Everything's slipped since then
Yeah.
for those markets.
Yeah.
So besides multifamily, are there
Yeah.
any other types of investments that investors should focus on just with the inverted yield curve?
Well, I think it's an interest rate, so it just depends,
Hmm.
right? I, there's no simple answer always in
Hmm.
investment, but keeping that interest rate in mind, because that's your biggest cash flow, and then property tax is the next biggest item, right? How do you manage those two?
Hmm.
And but yeah, there's I mentioned a couple that are probably seeing some stiff headwinds from 2020. Logistics was doing fantastic, and for the last number of years. I don't know if it'll continue that way, but how you buy there is also going to be critically important. Office building in at least our area, probably all areas, has really struggled and will continue to struggle because 2020 we saw just a change in how the workforce arrives to work, right? Many of us have some time not in the office, working at home or working. We took our honeymoon and we worked in Hawaii, for the part of the time that we were gone. So work is just looking different. So office is probably still going to be a difficult marketplace to be in. But that's, it really depends on the risk curve. Office logistics are reliant on, one or a few, customers. Multifamily relies on many customers. Now, the benefit, there's less risk there, but there's obviously more people you have to deal with. And I don't know about you, but I've got 5 kids. And people are hard to deal with. I'm hard to deal with. So it's all of us. It's
So
a human thing.
do you see this continuing till the end of the year, going into 2026? Where do you think this is going to shift again?
Boy, that's a great question. President-elect Trump has already made some incredible moves in the world politics and the whole Greenland and defense and
Right.
Canada and ousting a premier and just recently getting peace in the Middle East. Who would have thought? And he just threatened, these hostages need to be returned before I'm elected or all hell's going to break loose. He used a little different language, but
Right.
in essence, the same thing. It'll be very interesting. He's not even looked at the domestic policy or made any comments on that. He can't force the market is too big. He can't force a certain thing, but I do think it'll be a great investment year because he's pro-business,
Right.
and so I do think the next 4 years, particularly the next 2 years, will be heavy investments. People will feel comfortable investing. So if you have something to sell, I'd sell it. If you're going to sell it in 4 years, you probably should consider a year or two because I think the best 2 years of a presidency is the first 2. So that's, there should be a lot of transactions, I think, in the next couple of years. But
All
what
right.
they look like, I don't know.
Okay. Well, Dan, it was so great to talk to you today. You're
It's
always,
a pleasure.
I love how your head thinks in terms of financing, and I always learn something new every day.
Thank you, and it's a pleasure working with you, obviously, as one of our listing agents.
Yeah. Thanks, Dan.